Hello and welcome to the Sanlam Lifestage Strategy Investment Performance Update for the quarter ended 30 September 2024. I am Adarsh Sundar Prasad, an actuarial specialist at Sanlam Corporate Investments. The Sanlam Lifestage Strategy is a lifestage strategy that aims to address the needs of retirement fund members through their retirement savings journey and is broken up into two phases: accumulation and preservation. During the accumulation phase, members are fully invested in the Sanlam accumulation portfolio, which is suitable for investors looking for superior long-term real returns and can accept short-term market volatility. With a total strategic allocation of above 70% towards equity, this portfolio has an aggressive risk profile. Members enter the preservation phase 6 years before retirement, with their retirement savings being gradually transferred into the Sanlam Capital Protection portfolio. This portfolio aims to safeguard accumulated capital by delivering positive and stable returns over short periods. Let's look at the market and investment performance of the two portfolios underlying the Sanlam Lifestage strategy. Although developed market equities performed well, driven by the growing consensus that inflation is largely contained, this was overshadowed by the Rand's 5.6% appreciation over the quarter, resulting in a modest 0.4% performance in Rand terms. Meanwhile, emerging market equities staged a strong comeback in September, primarily fueled by gains in China and South Africa. However, the Rand strength eroded some of these gains, resulting in a 1% return for emerging market equities for the quarter. Over the long term, both developed and emerging markets have done well. As at 31 August 2024, the Sanlam accumulation portfolio held less SA inflation-linked bonds than its strategic asset allocation by approximately 3.6%. In contrast, the portfolio had a larger allocation to SA alternatives relative to the strategic allocation by 5.6%, which positively contributed to the portfolio's performance. Over the third quarter of 2024, the Sanlam accumulation portfolio returned 6.7% compared to its benchmark of 6.6%. The portfolio returned 23.2% against the benchmark of 23.4% over the one-year period. This is largely influenced by the strong domestic and foreign equity performance over the past 12 months, which the portfolio allocated roughly 70% towards over this period. The portfolio has outperformed its benchmarks over 3 and 5-year periods. The portfolio's consistent outperformance over 5-year periods has helped close the underperformance gap over longer periods. Important for members is that the portfolio continues to outperform inflation, delivering strong real returns. Turning our attention to the Sanlam Capital Protection portfolio, where the asset allocation is managed carefully to reduce risk, while still providing sufficient exposure to assets such as equities to provide good long-term returns. The portfolio returned 2.8% in the third quarter of the year and 10.7% over the year, and continues to deliver positive real returns over 3, 5, and 10 years. Thank you for your time.